All right. So if candlestick charts still look a bit confusing in TradingView, don't worry. You're about to understand them in a really simple way. Let's go step by step. Each candle represents price movement over a set time, like 1 minute, 1 hour, or 1 day, depending on your chart. Every candle has four key points: the open, the close, the high, and the low. That's basically the full story of price in that time. Green means price closed higher than it opened, so buyers were in control. Red means price dropped, so sellers were stronger. The thin lines above and below are called wicks. They show the highest and lowest price reached before closing. Long lower wicks can show buying pressure. Long upper wicks can show selling pressure. It's basically rejection at certain prices. One candle doesn't tell the full story. You need to look at multiple candles to understand if the market is trending up, down, or moving sideways. Candlesticks make the most sense when you combine them with support, resistance, and trend direction. That's when analysis becomes powerful. And that's it. You now know how to read candlestick charts in TradingView. It takes practice, but once it clicks, it gets a lot easier. So yeah, keep going.